Good morning and welcome to the trade setup right here on BloombergQuint Live. Well, it's a mixed day in terms of news flow. There isn't as much of news flow as was the case in trade yesterday. But let's dissect everything. So first, in terms of global news, the Fed member Bullard said that the Fed needs to move very quickly to raise interest rates to around 3.5% this year, with multiple half-point hikes, and shouldn't rule out rate increases of 75 basis points as well in one go. That would be quite something. I think he also mentioned that some of these rate action is priced in, though I don't know how he's qualified to do that. But be that as it may, 75 basis points increases as well is what some Fed members are now starting to talk in. Interest rates, big determinant of what could happen to sentiment. So watch out for that. Oil has largely been on an uptick because the Libya outages have added to the Russia supply fears. Even though I think, as I saw from yesterday's quote, it's been a dollar kind of a downtick, but at 112 it's still in the worrying zone. US futures, though, have gained marginally in early Asia trading, which is probably a good sign. By the way, there is some bullish note. So the US markets were kind of placid in trade yesterday. So quite not too much there. But there is this one. Okay, are we getting the US? Okay, yeah, this is what the US markets did. As I said, very placid there. But there is this Bloomberg chart which shows how speculators have boosted their bullish bets on global stocks in a meaningful way. Actually, the most in almost 2 years. That tells you a story or two of how people are wanting to buy the dip yet again. Is global stocks, of course. But after being in a corrective mode of sorts, the bullish speculative bets on an uptick have actually gone up. Let's see if that comes about. I do firmly believe, as I've believed for the last few days, that this is still not the time, but be that as it may, I'm a fairly small observer as opposed to the large participants. So let's wait and watch what does happen to markets. The SGX Nifty should come up on your screen next. And okay, this is the rest of Asia, which is mixed bag, some green and some red. So thanks for bringing that up as well. And the SGX Nifty should come up on your screen next. And you have a kind of a flattish start to ourselves if the SGX Nifty is to be believed. Now, in yesterday's session too, it's a dramatic day of selling really off the heavyweights. Even the broader end of the spectrum did have some gainers. And that is what this is important, simply because if you see either the advanced decline or the sets of gainers and losers, you will see that the broader end of the spectrum looked bad, didn't look probably as bad as the large caps did, right? So 163 advances were there on a day when the Nifty was down about 2%. And a bunch of stocks, be it on the defense side, be it on the opening up theme, fertilizers, soft commodities essentially did really well for themselves in trade yesterday. There were a few which came off largely on the IT side. IT had a big down day. And you got to question yourself that this kind of carnage that we've seen in mid-cap IT, is it preparing a bit of a bottom? Even though IT is not in favor for most people, there has been a substantial downtick there. And I've heard a few people talk about this possibility. Let's wait and watch if that shapes up. Anyway, so what's the trade setup for the day today? Well, I reckon it's difficult to predict if yesterday's strong selling in heavyweight counters will continue or no. So that's part one. Markets at about 20 times FY23 EPS are probably still, they are 20 times currently. I believe they are trading about 20 times simply because at the end of this earnings season and possibly the next earnings season, we'll see earnings revised downwards, and that will therefore make sure that the multiple gets revised upwards. So I would believe that the markets are not at 20 times, probably at 22, 23 times or thereabouts. So, it's not cheap per se, Indian markets at least. And I think that there's a possibility that risk aversion to a bunch of sectors might actually move up, considering that normally the result season starts off well and then becomes poor. This time around, the result season has started off very poor. And therefore, you got to ask yourself, now let's see with the trades that have played. Because the result season started off poor, can there be more downside and more risk aversion? That's the key thing. I still believe leverage longs are imprudent. Not the time as yet to have leverage longs, but defense and soft commodity stocks may hold up, and therefore you're going to pick and choose your pockets. And I'll tell you why I mentioned soft commodities as well a bit later on. Firstly, The nature of selling yesterday, 6,387 crores. Even if this included some bulk deals, the fairly large number that we saw after some time, such a large number, and some heavyweight counters saw some very heavy selling. So Infi, it saw about 2,919 crores worth of delivery-based selling on the NSE alone. That was Infosys. These are trading stats from Monday. TCS saw about 1,350 crores of delivery-based selling on NSE. The HDFC twins combined saw a net outflow of 3,800 crores or thereabouts. I mean, excuse me, 5-10 crores here and there on that base, but yeah, about 1,300 crores of delivery-based selling on NSE. So all of these were down and out in trade yesterday. What did well was NTPC. It closed, I think, at the day's high. And somebody told me that this is a 10-year breakout on NTPC on delivery-based buying worth 570 crores, which is about 5 times the average buying for NTPC. Tells you a story or two about how the selling was in some of the heavyweights and how the less fancied names actually did well, something like an NTPC. So, well, do watch out for that pocket. The PSU pocket. We were talking about PSUs yesterday, and look at the movers, right? NTPC, Bharat Dynamics, some fertilizer names. All of these were the ones which did really well. Some key results today include an LTI, and be rest assured, in my today's conversation with Mindtree or tomorrow's conversation with LTI, I am going to ask them about the merger, whether that happens or not. But LTI results today, ACC results today, Mastech would be interesting small cap IT name, and Tata Steel Long Products, which presumably will come out with fairly decent set of numbers. Some of these commodity companies will continue to do well in terms of earnings sprint. Stocks to watch includes a Mindtree. So revenues were up about 5.4% at 2,897 crores. EBIT margins 18.94 versus 19.23. So actually held up reasonably okay. And the net profit was up 8% at 473 versus 437. Now, first, the statement issued by both Mindtree and LTI, they're saying that the reports about the merger of the two companies are speculative. They have not denied the merger. So that's part one. And then what did brokerages think of Mindtree? Well, simply because mid-cap IT is not the flavor. There are some brokerages which have cut the target prices quite considerably, not because the earnings have been revised downwards, but because multiples have been revised downwards. And therefore, I thought I'll bring in the Nomura report, which didn't have such a large deviation on target prices, but spoke about the numbers. So they said that the Q4 met expectations broadly, and client metrics are tracking in the right direction. The deal wins, though, continue to be sluggish. The growth is made up by smaller projects, but I think this is true for the industry at large and not just for Mindtree, by the way. And robust growth does continue, and the headcount does signal strong growth will continue. So that's the larger point, that earnings have been largely in line, just that the target multiples for most of the IT companies are getting revised downwards, which is why you will see maybe, if I'm not wrong, or Morgan Stanley, you will see it on various media platforms, or Morgan Stanley revises Mindtree target downwards, but largely they've cut the target multiples. If you believe that the target multiples shouldn't be cut or have been cut enough, maybe at some point of time, people might start revising it upwards as well, if indeed the strong showing continues. But difficult to say that right now with what's happening to multiples in IT companies worldwide. But watch out for Mindtree today. Mahindra & Mahindra, Yonhap is saying that 3 firms have submitted the bids for SsangYong Motors. Some other stocks in focus include an RVNL, which has signed an MOU with Mahanadi Coalfields for PMC, the project management consultancy for rail infrastructure works, or MCL, to RVNL from concept to commissioning. The size of the order is not known, but we thought it was important, so we brought it out. IGL, it's been granted authorization for development of the CGD network in the Banda, Chitrakoot, and Mahoba regions. Exide is going to invest about 6,000 crores in cells, modules, units in Bangalore, I presume for electric vehicles. And Mishtan Foods is a small company, but they've approved issuing a bonus issue 1:1. It's a 1,300 crore market cap, might be active, so therefore brought it out. Why I said soft commodities will do well on a day like yesterday. Look at the gains that happened for a JK paper, for a Magad sugar, for a Jaishi tea. This tells you why soft commodities are in focus. Suddenly, the shift of Sri Lanka's pain on tea exports is India's gain. Russia's pain on paper exports is India's gain. Sugar, which was India's the second largest producer, and with what's happening in Brazil and elsewhere, sugar exports are doing well, ethanol is doing well. So, soft commodities are just right up there when it comes to people preferring stocks. So do watch out. Don't write them off on because a day's rally or two has happened. I'm not saying they should be bought. I'm saying you should look at the numbers, look at the earnings estimates, look at what's the kind of earnings that they can do, and then try and figure out that whether they are cheap or expensive in terms of valuation. But certainly, defense and soft commodities are the bottom line when it comes to people looking at stocks. I mean, look at what happened to a Bharat Dynamics. For all the talk, actually, Virat, if we can we get a 1 month chart for Bharat Dynamics BDL? And the reason I urge you to look at this, therefore, is because these stocks have had a bit of a run up, and if you wrote it off, and if you thought that, oh, the run up has been too fast, too sweep, and therefore don't want to get into these stocks, you will see how strong the move has been even after a run up. So look at that, right? The month of April, the stock has gained quite considerably from a level of 550 to about 700, right, in the first half. And then it's actually plotted one more very steep set of rallies. So that's the point about these names, that they are finding favor right now. So make the trend your friend. Don't go against the trend. That's the limited point. A couple of other things in your style illusion, the OFS opens for non-retail today, retail tomorrow. The reason why this is important is because the floor price is 800, a discount of about 25%. So if indeed the stock has a sharp gap down, if it does, then you know why this is happening. I doubt anybody can participate in this trade. This is more a knowledge thing. And lastly, insurance data was out. Morgan Stanley's note was pertinent and therefore brought it out. They say that the industry individual APE growth in March has recovered to double digits from mid-single digits seen in January and February, which should be construed as slight positive. Both private sector and the industry grew 12%, but within that, the one that did well for the month of March at least was HDFC Life. ICICI Pru kind of sputtered a bit with about a 1% growth. So let's wait and watch what happens there. But net viewers, still not the time for leverage longs or contra longs, despite the fact that the markets have corrected a bit. I believe there is still some time for that to happen. There is a wonderful piece that I think Economic Times has written on why Kenneth Andrade is saying it's not a time for buying the dips. You might want to look at that. Um, and yeah, watch out for specific pockets. Like I said, defense of commodities, some media stocks, all of them seem to be doing okay. So maybe that's a pocket you might want to look at. Essentially, look at earnings and try and see if your stocks are available at good valuation. Thanks so much for tuning in today, viewers. Have a safe, profitable day ahead. If you're stepping out, stay safe.